So I don't think this cycle will be as big. I mean, I could be wrong about that, but I don't think it'll be as big. If you look at its curve, it is exponential, right? And that point, it's exponential in two ways. One, it makes these big parabolas, and then it crashes, and it makes another parabola. But what it also does, it makes a parabolic Metcalfe's law curve, meaning going from $1 to $10 is a massive move. So now your price rises back toward fair value. Well, that price rise is pretty quick. So what happens? Humans, again, mostly guys, because we're hunter-gatherers and we follow movement, we start coming in and we want to buy the stuff. And they panic, buy, and we shoot right past fair value.
Mark Yusko begins by addressing the exponential growth of Bitcoin, highlighting its unique trajectory characterized by parabolic rises and subsequent crashes. He explains that Bitcoin's growth follows Metcalfe's law, where the network's value increases with the number of users. This exponential curve signifies that while early price movements like from $1 to $10 are massive in percentage terms, subsequent moves like from $10 to $20 become less impactful. This phenomenon reflects the law of large numbers, where each incremental increase in value requires significantly more capital. Yusko emphasizes the importance of capital inflows into Bitcoin, suggesting that 2024 could see a record conversion of fiat currency into Bitcoin. He predicts that this year might witness more fiat being converted into Bitcoin than in the entire history of Bitcoin's first 15 years, potentially reaching around $300 billion. This massive influx is expected to impact Bitcoin's market cap significantly, which currently stands at approximately $1.2 trillion. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
If you look at its curve, it is exponential, right? And that point, it's exponential in two ways. One, it makes these big parabolas, and then it crashes, and it makes another parabola. But what it also does, it makes a parabolic Metcalfe's law curve, meaning going from $1 to $10 is a massive move, percentage-wise, right?
Yes.
10 times. Going from 10 to 20, that's another 10, but it's not that big a move.
Yeah.
So the law of large numbers starts to catch up. But here's the rub. Your point on how much money is coming in is really, really important. And I made a comment the other day on Twitter that if I believe this year more fiat will be converted into Bitcoin, actual transaction, not paper, but actual transaction, than the history of Bitcoin. In the first 15 years, and I haven't done the math exactly and counted, but I think it's right around 300 billion. I think it's a little bit less than that. And exactly. But the crazy part is that's on $1.2 trillion of market cap. So we have 1.2 trillion. Like, well, but if it's 1.2 trillion, didn't 1.2 trillion come in? No, that's not the way it works, right? Because if I'm trying to put $1 in and you have $1's worth of Bitcoin, you may say, you know what? I'm not selling it for $1. I'll sell it for $1.20. I'll sell it for $1.30. I'll sell it for $1.40. And so what happens is the people that came in early, right? They had to put a very small amount of money to get a huge amount of Bitcoin. In fact, some of them didn't have to put in any money because they mined it. And so as that then matures and people put new money in, then the amount of capital that converted to Bitcoin is a certain number. But then if you and I trade that same thing, we're not putting any new money in, right? So it's called a multiplier. And so some people have estimated that the multiplier is like 100. I don't think it's that high. So like if $1 comes in, the price goes up $100.
Yeah.
I don't think it's that high. I actually think it's a meaningful number. And so if you look at the last time we went from 10,000 to 60,000 back in 2020, only 10 billion came in. Think about that. The price quintupled, or sextupled actually, and we only brought in 10 billion into GBTC. This time we've already had more than 10 billion come in, and we went from 40 to 68. But why didn't we go up the same amount? Again, law of large numbers. But here's your point. How much is going to come in? I think this year, 300 billion, which again is more than all the money that's been converted in the past, comes in. Well, where's that 300 billion number come from? Not just out of the sky. There's 30 trillion with a T, and that's, remember, 1 trillion is $1 every second for 31,710 years. That's a lot. 30 trillion owned by us, boomers, controlled by our advisors, the UBS, the Merrill Lynch, the Vanguard, whatever.
Okay.
If those advisors say 1%, that's 300 billion.
Wow.
So it's not 10%, it's not 50%, 1%, which is a reasonably logical number. 2% is better, 3% is better, but 1 is logical. If 1% comes in, that's 300 billion. And that 300 billion, I think, will move the price materially more than 300 billion. And then the problem comes that FOMO kicks in. So if you think about the 4-year cycle, we've talked about this in the past, the 4-year cycle is really easy. The price goes down in crypto winter because people are panicking and they're selling and they never really understood what they bought and they FOMO'd in at the top. And so they sell. And we have fair value and we get way below fair value. And the investors like to buy things below fair value. That's my job, right? That's what investors do. We buy things below fair value. So you start moving the price back to fair value, right? And around halving, you get to fair value. Well, then what happens? Well, the fair value increases. Because when the halving occurs, the number of block rewards gets cut in half. So if you think about it, the amount of money you're giving to the miners to secure the network gets cut in half.
Yeah.
Their costs are fixed. So either half of them go out of business or the price adjusts.
Right.
And magically, the last 3 times, last 4 times, the price adjusts. And it's totally logical. And it's mad genius that they program that into the code. So as that price rises, so now your price rises back toward fair value, well, that price rise is pretty quick. So what happens? Humans, again, mostly guys, because we're hunter-gatherers and we follow movement, we start coming in and we want to buy the stuff. And they panic, buy, and we shoot right past fair value. And so in the past, we get to about 2.3 times fair value at the peak. So if you go back to 2017-18, we went to 20,000 when the fair value was 10. Then last time we went to 68 when the fair value was 30. Now, why do we go so far above? Well, in those previous 2 cycles, we had lots of leverage, right? You could borrow 99 cents on a dollar to, lever up. Some of the leverage is gone. There's still some, but most of it's gone. So I don't think this cycle will be as big. I mean, I could be wrong about that, but I don't think it'll be just as big. So let's say we get to 1.5 times fair value.
Okay.
If fair value goes from 50 to 100, which I think it will, then you get a 50% increase above that. That's 150. But here's the problem. At 150, those advisors are going to be freaking out. And this is where my whole normalized thesis could just get blown out of the water. And we could have a parabolic move that will catch everybody off guard. And, it could, and Max Kaiser and others have been talking about this, and, it's going to 200 or 300. It's a low probability event, right? If you think about probability, you have your tails, and then you got your thing in the middle. So the more likely outcome is we end up well into 6 digits, 120, 150, somewhere in that range. That seems pretty darn logical.
Yusko explains that the market experiences crypto winters where prices drop significantly due to panic selling. This is often followed by a recovery as prices move back toward fair value. He notes that Bitcoin's halving events, which occur roughly every 4 years, reduce the block rewards for miners, thereby reducing the supply of new Bitcoin. This supply shock typically leads to a price adjustment, pushing Bitcoin's value higher. Yusko recounts past cycles where Bitcoin's price surged well above its fair value due to leverage and speculation. However, he believes the current cycle might not see as extreme a peak due to reduced leverage in the market. Instead, he predicts a more moderated rise, potentially reaching 1.5 times the fair value. If fair value reaches $100,000, Bitcoin could climb to $150,000. Nonetheless, he acknowledges the possibility of a parabolic move driven by institutional FOMO, which could propel Bitcoin to even higher levels.
The tail event of, we're going back to zero? Look, I was watching this thing. No. Here's the thing. The only way this goes to zero is if, and it's capital I, capital F, but if the NSA or the CIA actually did create. I was
going to say,
right?
Yes.
That's true, right? If they did create it and they control that big Nakamoto wallet, they could, right, say at some point, all right, we got everybody to convert fiat into this. We took all the dirty fiat and we got the economy back, and we're just going to sell the Nakamoto wallet and crush it back to that could happen. I don't think it's a non-zero probability, but I think it's a little teeny tiny left tail event. The right tail event, right, which is people start FOMOing into this with more than 1%, and there are no Bitcoin to sell, and BlackRock's got to buy it, and we get a really big move. That's a non-zero probability too.
Yusko also touches on the potential risks, including the hypothetical scenario where government entities like the NSA or CIA control a significant portion of Bitcoin through the Nakamoto wallet. If they were to sell off these holdings, it could crash the market. However, he considers this a low probability event. On the flip side, he highlights the right tail event where increasing institutional demand and limited supply could lead to an unprecedented price surge. Yusko envisions a future where Bitcoin becomes an integral part of investment portfolios, driven by institutional adoption and the shifting dynamics of wealth allocation. The combination of reduced supply, increasing demand, and the inherent scarcity of Bitcoin could set the stage for substantial price appreciation. As more capital flows into the market, the potential for significant gains remains high, albeit with the caveat of market volatility and external risks. Please like and subscribe my channel.